Yeah, we were at this slide which was talking about the thorns in India's initiative as far as the digital financial inclusion is concerned. I personally believe that some exploration is required in terms of the kind of products we are having and the kind of issues and challenges we are facing. Still our people are not using the financial services which are offered free to them, because they feel, the argument which I made is that they still prefer cash. A lot of literacy level issues are there. Same would be replicated in your country as well. Even in your country you will have these issues, but over a period of time you will get solutions. Overnight solutions are absolutely not possible. This is what has happened and has been recognized globally by what India has done. The proportion of the adult Indian population with an account at a financial institution increased from 52% to 79%, according to global Fintechs, which corresponds to approximately 250 million. However, Government of India data shows approximately 330 million, which is used throughout this particular report, based on which the data has been picked up by me. So if there is a will, you can consciously do it. It's only the will that is required. Now, if you have a will, you will always find a way. This is what Government of India and banks in India have done. This financial inclusion story is incomplete without the involvement of public sector and private sector in the country. What has happened is that post 2014, the banks and the Reserve Bank of India realized that it's only the technology that can enable to do financial inclusion very aggressively. It was not for the purpose of showing good numbers to the world at large, but it was actually the intention and purpose to ensure that we do it. And when we do that very effectively, we had to make use of Fintechs. So, digital financial inclusions and Fintechs. What these Fintechs are? What do you mean by Fintechs? Simple. Across the world, recently in Colombo, before this crisis happened in Colombo, there was a global conference on Fintechs. Almost 200 Fintech representatives attended, and 10 different governors from different countries attended, to understand the importance of Fintechs for digital financial inclusion. Now, what is a Fintech? What this conference did, you know? They wanted to define Fintechs. What do you understand by Fintechs? What is the precise definition? They have not come out with a definition. They have come out with some description, and description is now being used as a definition. After reviewing more than 200 scientific papers citing the term Fintechs, a study on the definition of Fintechs concluded that Fintechs is a new financial industry that applies technology to improve financial activities. Simple. It's a company, technology company, delivering banking products. To put it differently, banks are doing banking business on the basis of certain technology, but Fintechs are not banks, but they are dealing or acting as a mediator between the last end consumer and the institution which is giving the financial service. Not necessarily banks, even the non-banking finance companies, cooperative banks and all these are covered. Fintechs is a new financial industry that applies technology to improve financial activities. Fintech is the new applications, processes, products or business models in the financial services industry composed of one or more complementary financial services and provided as an end-to-end process via the internet. So, it's a faceless delivery. Financial technology has been used to automate investment, insurance, trading, banking. Automation. It's only the automation and technology which will enable any country to do a digital financial inclusion. Where Fintechs stand today? This is the financial position or investment in financial technology companies. Global investment in financial technology increased more than 12,000%. from $930 million in 2008 to $121 billion in 2020. 2019 saw a record high with the total global investment in financial technology being $215 billion, and in Q3 alone it was $144 billion. Why? What is the significance of 2019? 2019 created an opportunity via COVID. It created an opportunity via COVID. So huge investment has come over here, and it will continue to have, because you have viruses everywhere. Every country you have virus. Not necessarily COVID, there are several other viruses. You have a virus of corruption also. So all these viruses are required to be handled in a different way. What kind of technology these fintechs, financial technology companies are using? You might have heard a couple of words in this definition. Fintech companies use variety of technology. One is artificial intelligence. The other is big data, robotic process automation, and the blockchain. Now, what is artificial intelligence? There is one more area which has not been included here probably, or rather which I have failed to include. Machine learning. Machine learning, ML is one more area which they are using. What is the meaning of artificial intelligence? Let me not go technically, because this is not a technical session. Artificial intelligence is nothing but using the algorithms in such a way that prediction is possible. How it is being done? For example, NPCI in India is using fraud risk management module. And what is this fraud risk module using artificial intelligence? Is simple. For example, there is an account, saving account in a particular bank, and on an average, that account is having a transaction of 5,000 rupees per month, or say $50 per month. Suddenly that account is having a receipt of $200. This is away from the normal trend. This is not normal. What is normal? Normal is $50. That's the max limit. Suddenly $200 have come up. Alerts are triggered by NPCI to the respective banker. Boss, see what is happening to this account. That banker will pick up phone. Where from you got this money? Let me know what is the source. This and that, blah 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 blah. But then a potential fraud is avoided. This is artificial intelligence and machine learning. It is a machine which is sensing. It is a machine based on the account's transaction. It is trying to interpret the behavioral dynamics of that particular account, not of the person, but of the account which exists in the core banking solution. Now, when this is studied, possible accidents are avoided. Possible accidents are avoided. So, this is what fintechs are actually using, and they are using robotic process automation. Several processes. For example, we have, even in my bank, there is a robotic process automation. What is that robotic process automation? We have National Electronic Fund Transfer. That's a switch where the funds are transferred in every batch across the country. NEFT, it's popularly known as NEFT. Earlier, the NEFT remittances, if there is an inward remittance which comes into my bank, which say 5 crore rupees, and say 10,000 account, the amount is required to be created, it was done manually. It was done manually. 15 people would do that. Then came robotic automation, robot generated automatic process automation, which will simply download the file and use host to host server processing. There is a host at NPCI's portal server and host at my data center. Host to host, both the servers will speak to each other, and the entire amount will be created to 10,000 account in a jiffy. Without human intervention. What I have saved? Time, cost, everything I have saved. Now, this is what these fintechs are using very aggressively, and therefore they are in a position to offer cheap financial services. Blockchain, let me not talk of blockchain because it is virtually banned in our country. I do not know when Ethiopia will see the light of this day. Blockchain leads to cryptocurrencies. You know cryptocurrencies, bitcoins, you have heard of it. That is one of the easiest mode of funding for terror. It has been banned in India. There are a lot of companies in India, fintech companies in India, they want Indian Bitcoin. But the Reserve Bank government of India is saying no to it for the simple reason it is faceless. Nobody knows who is the owner. Who owns it? Nobody knows what are the valuation methods. It's a closely held and secretive group which diverts black money for making more black money. So let's not talk more, even though if at all I have to, if at all you want me to talk, I'll require at least 1 hour to talk about blockchain and cryptocurrencies. We'll do it some other time. When you come next time, we will have a session on that, okay?
And our case also is banned by National Bank of Ethiopia.
Yeah, that's good. So don't learn about that. Don't learn about that. You should know. As a knowledge, you should know. Go to Google, type out blockchain. You will get thousands of articles on blockchain in different languages, including Ethiopian language. You will get the articles. You should know it. You should not touch it. Should not touch anything wrong, anything bad. You should not do it. Then artificial intelligence algorithms, as I was explaining this. Insight on customer spending habits, allowing financial institutions to better understand their clients, because it reads the transactions in the account. It interprets the behavioral dynamics that is reflected through the trend analysis and machine learning. And then there are chatbots. There is a fantastic service. I do not know, you in Ethiopia, do you have or in Africa, do you have WhatsApp? Is there any other option of WhatsApp?
Telegram.
You have?
Yeah.
You can chat?
Yeah.
Good. Now, if you can chat, chatbot is that version.
We do have chatbot, but I think bad.
Yeah. You see, there are positive views and negative views. What chatbot can do? I have got 10 products, my bank is having 10 products. What I will do, there would be 100 questions on these 10 products, which normally customer would ask. What is the rate of interest? What is the tenure? What is the term of financing? Standardized questions on any of the product. You prepare standard answers, and any customer asking a similar question for your product on your WhatsApp chat, the chatbot will respond without your intervention. Simple. This is a mechanism. I am not going technically into it. Do you know the chatbots were effectively utilized by Ukraine when Russia attacked Ukraine? Chatbots were effectively utilized. What did they do? Do you know? Perhaps in your country also they experimented. They used chatbots to protect their country by sending certain messages in 140 languages. In my country, in my language, I got the message which was pushed by Ukraine. So this is negative or positive use. As against that, immediately Russia countered that message via chatbots. So there is a different kind of war. Let's not talk of that war for the simple reason all wars are bad. One war is good. When you fight your brain with your brain, you yourself fight with your brain to ensure that you identify certain good things. So this war is good. So here chatbots are being used to help the customer understand the basics of the product which the fintechs are selling, or any banks which is selling. One of the fantastic bank in India is by Kotak Bank. Fantastic chatbot. Almost 600 questions. You can respond technically without human intervention. The customer is happy because he feels that there is somebody else who is sitting on the other side and responding to my questions. But that's not the story. Your questions are standardized and the response is also standardized. And if there is out of box question on that chat box, the response is simple. The chatbot sends that, sorry, I didn't understand what you are saying. now even that can be plugged so that the person who is trying to get a question feels really that there is somebody who is sitting and talking to me personally. Now how this can happen to millions and millions? This is how you have to use it very carefully and very effectively. This is an AI driven tool.
I missed the name of that bank who has fantastic in terms of chatbot in India. What is the name?
Kotak Bank. Kotak. Kotak. Kotak Bank. You go to their website. Download their app.
That is why you are asking the name.
Chat. Yeah, you need to learn. That's the easiest way to learn. Even you have any question, you will have my email ID on my YouTube channel. You can respond referring to this discussion and ask for details, documents, I'll share. But that is what I have been doing. So that's not an issue. Even if I fail to answer a couple of your questions, you can ask me on the email that has been given there. On my YouTube, you will get this email. You can ask me any question. Big data. We only talked about big data. For the first 10-12 years, the big data analytics has been picked up by various universities for teachings. It's not a data analysis, it is the interpretation of the numbers. When you have a huge data, how do you interpret? How do you get what you want to get? For example, in India, don't quote me anywhere, Facebook sold data to certain political parties. And via London, there was a political attack via social media. Organized. Nobody knew why everybody is getting such a hatred messages. Why it is happening. Now the war will not be fought with guns and bullets and aeroplanes and helicopters. The war will be fought on the information. They will enter your brain and they will ensure that you do what they want you to do. Have you heard of a PUBG game? PUBG game you have not heard. At least 3 to 4 younger people died. PUBG is a game where you follow the game in real life, and at the end of the game, the gamer tells the person to hang himself.
Yeah, I read that on news. Yeah.
Now this is what technology is doing. We have to look at it in a different way. We should not be a victim, or neither we should allow anybody else to be a victim. That game is banned in India. But it took 5 years for the government of India to identify that this is not something good in the interest of people. But that is what technology can do. But a big data analysis enables you to understand your customer, how they are doing, what they are doing, what are their habits, spending habits, and all that you will get to know. This is what I talked about. RPA helps to process financial information, robotic algorithms. For example, there is a trading happening in a particular equity in a particular stock exchange. Algorithms can predict whether the share is going to go up or is going to go down based on the financial evaluation. This is a huge complex mechanism. But there are companies who are doing it and making money. Guaranteed money. I have not tasted. If you really want to, let me know. I'll give you a clue on that. But that is something not a good money. That is not good money. Method, legally valid. Nobody can challenge. If I do a research on a particular share and come out with a prediction based on my analysis, what illegal thing I have done? Done nothing. So that's what the robotic process automation helps. Blockchain is, I said, let's not discuss much about it, but blockchain enables you to mask your identity. If fintechs are doing, there are several fintechs which are doing this. There are types of fintechs. There are several fintechs in banking, cryptocurrency, blockchain, investment, insurance, machine learning, trading, payments, lending, insurance, name it. Name it. India has got almost 640 fintechs, almost 640, and they're making money. They're not loss making, they're making money. How do they make money? This is the method for fintechs to make money, and this is the same method to use fintechs for financial inclusion. A last mile man, a man sitting in a remote village, can be accessed provided network is there. If there is no internet, forget about fintechs. It's only a theoretical subject. You need to have internet to reach out to these various activity. And let me tell you, the evolution of banking that is happening globally apart from this fintech is that you will find in next 10 years the entire banking horizon is likely to change, and that change in horizon is coming from Australia. What Australia is doing, you know, if you have got some benchmark money, minimum, say $1 billion, you got benchmark money, huge money. Bank will walk into your home or your office and give you all the services, and that service is known as private banking. Private banking. Now this private banking will be a concept, will be mushrooming in Australia, will mushroom in Europe, then it will come to US and UK, and then it will penetrate to my country and your country. But then it will take 10 to 15 years. But as a banking student, you must know what is happening on the banking horizon across the globe. So this is something that is likely to happen, and this is what the fintechs they are making. How do they make money? Challenges for fintechs, financial technology, huge challenge, security problem. Dealing in money, you have security problem, user privacy, data protection. They sell datas, so that's the credibility crisis there. You have to keep on investing in technology because technology is ever changing. Today's technology is tomorrow obsolete. You have to spend a lot on technology, and your business model will survive only if you turn on to volumes. If you capture the volumes, then you become viable. Quality of software, that's again a similar issue. Industry in India, there are not much regulatory guidelines on fintechs. The government has been saying that there has to be a separate regulator for fintechs. But then if they are dealing into people's money, RBI said nothing doing, we'll regulate them. And they have come out, now Reserve Bank of India has come out with a detailed paper as to how to do digital lending. They have allowed NPCI to introduce UPI through which the payment and receipt or remittances has become seamless in India during the last 4 years. It has stabilized. The clearing process, the check clearing process has been done in India in 4 grids. Suppose today here we are in a western grid which covers 5 or 6 states of the country. You drop a check today with the banker, by 5 o'clock in the evening, your check, whether it is passed or rejected, is intimated immediately. There is no physical movement of checks. How does the clearing takes place in your country? You are sending check to the clearing house, right? And then you are getting the credit or debit next day via central modular. There is one bank which will handle clearing for all. That kind of technology you are having. We do not have actual transfer of checks. We have check truncation system. So the image of checks are sent. CTS has become popular since 2010-12, and now people will not be using checkbooks. They will simply be using the digital platforms. 2 options: real-time gross settlement (RTGS), and second is NEFT, National Electronic Funds Transfer. Now, National Electronic Fund Transfer functions for 24/7. 24/7. My bank functions 24/7. In the wee hours of the morning, your friend wants $5, you can do that. You can do that. That is the stabilizing technology in a country, but then requires a stringent regulation on which Our country is working very strongly as to how to do that. अरे भाई क्या हो गया? Shit. It started from the beginning. That is the technology. You never know when it will fail. Oh. This we did. Security, yes, we were here, right? Poor control. There is no control over fintechs. This is not my view. This is a view of a Government of India study. Government of India appointed a committee in 2020 and they have come out with these observations. This is a fact. Attrition. People do not stay with them. These fintechs, a lot of attrition is there. That creates different kind of disturbances. They fail to mobilize capital in India. Almost all the investors in fintechs in India are from China and from US and from UK. Let's not talk about the political scenario because that is not the domain of our discussion. But then you will understand or visualize the problems that India is facing if this is the true story. Why China cannot attack America or why America cannot attack China? Simple logic. 40% of treasury bonds of US are subscribed by China. The moment China says, pay me back my money, bonds, US is gone. So who is superpower? Then role of Fintechs, 20% of the population.
Sorry, sir.
Yeah.
Why Indian investors own fintechs? Why?
Then why India is investing gradually. Initially the Indian investors thought that this is not going to survive.
Fintechs?
It took 10 years for them to realize there is a good investment opportunity. So initial period there were issues. And you will not believe that Microsoft, IBM, HP, none of them are Indians. They are all American companies. They invested in India because they already have a base in India in terms of their products. They invested. Now the Indian investors are going, but then India does not have typically a venture capital fund where high risk activities are funded by these venture capitals. Returns are too high, but risk of capital loss is too huge. So certain Southeast Asia based, Singapore based and Mauritius based venture funds invested into Indian fintechs. And the biggest bomb that happened or biggest bad thing that happened 2 years ago, when Paytm floated an IPO, it bombed. Paytm has a Chinese investment and the Chinese investment was required to be shunned or to be repaid. They went to the Indian Stock Exchange, got the issue listed, could not get the subscription which they wanted. This indicates the, unexplained reservation by the prospective investors towards the fintechs. Paytm is a fintech, financial technology company. Okay, so that's again, if you ask me a question, that will drive us to a new subject and then we will not be able to conclude this.
Maybe the issue of partnership between fintechs and the traditional banks in India.
Yes.
How is
It is there. What is happening is this, for example, if I talk of WhatsApp is tying up with various banks for their payment channel. Google Pay has tied up with almost all banks for promoting.
Model do you believe is perfect or better?
All are using similar technology. So there is no.
Partnering with fintech companies or having our own.
Of course, partnering. Why? I'll tell you. Fintech is a different domain which bankers cannot handle. Bankers do not have a technology. Bankers' technology remains limited to the extent of CVS or handling banking transactions. Fintech is not your domain. You have to use fintechs for financial inclusion. You need not necessarily be a fintech. You try to be a neobank, but is that the objective? What is the objective? You want that your entire population should get financial services, should come into delivery channels which the government wants you to do. How that can be done? Fintechs are the mediators. Why they are significant? Because of the mediation that they do. The last mile man where the bankers cannot reach, fintechs do that. They do it cheaply. They do it cheaply, and if we go in detail of that, the financial structure, the wage structure has huge tangent amongst them, huge difference. In a fintech, a man can get a salary of 10,000 rupees. In a bank, he gets a salary of 30,000 rupees. Fintechs do not care or do not handle or protect your money. It is like traveling in a train. You buy a ticket and go to a destination, you don't own the train. You cannot be owning a train. Buy a ticket, travel, go to your destination, be happy. And therefore, the partnering is something that is the cake of the day. 28 crores, this is a point I have already talked about, right? Untapped economic potential is there, which we can tap because of financial inclusion. They have a huge role to play within given ecosystem and given regulation. Emerging technology can play a very huge and very strong role. Emerging technologies are such that seamless handling will be done. Government of India has already taken up a lot of steps in fintechs interest, like unified interface, Aadhaar card and application programming interface. Where these are the initiatives which government took 15 years ago, and because of which India is where it is today. Had the government not prioritized its focus on inclusion, it would not have reached to these stages. Fintech companies are innovative, nimble and have a lower operational cost. Here is what they can do, are doing in India. This is what they are doing. Taking financial services to the farthest corners of the country, increasing access to the credit, innovating with speed and compliance, promoting cashless economy. That's where the bogus notes comes up, and that's how it is handled. This is the topic number 1 which I wanted to talk to you. You have any questions, please do ask.